How's it going, everyone? It's me back with another video today, and as you could see, today is a very bloody day in the stock market. As you can see, I'm down around 3% today, which is about $1,800, and this is probably the most I've ever been down in one day, which I don't see as really a bad thing. Honestly, I think it's a good thing. I have around almost $3,000 in cash and unsettled cash right now. So right now I'm going to just wait until that cash settles, and I'm going to start buying. Investing more into VOO. As you can see, VOO is down around 3%, the same as my portfolio right now. And I really want to get this to 30 shares. That would be pretty good. 30 shares. It's paying me around, I think it's around 25. No. I think it's around $0.50 per share, something like that. And so it's a really good dividend payer, and it's really good in growth. I really want to track the S&P 500 with my portfolio, and as you can see, I have stocks. I have companies in the S&P 500 right now: Apple, Microsoft, Google, Nvidia, Tesla. All of these stocks, they are very good companies that I see growth potential in the future, and I'm going to keep holding, and I'm going to keep buying at low prices as they are right now. So to my understanding, the stock market is down right now based off of recession fears. So people are just selling a lot. I just noticed today that Apple is down the most it's been down since September 2022, so almost around 2 years ago. Down around 5% today. So this is my portfolio review today. I'm sitting at about $61,000 in total assets around my whole portfolio, and my total gain today is around $13,000, which is 29%, around 29%. Just last week I was at around $17,000, so you could just see how volatile the stock market can really be when there are fears and red days. And this just shows you how fast the stock market can go down and how slow the rise in the stock market can really be. So let's go down to Apple first and foremost. As you can see, Apple is down around 5% today, which in my portfolio is around $555 in losses today. I'm sitting at around 49.7%, so 50% gains in Apple. I really do like the buying opportunity in Apple. I'm going to start researching more into the buying price of Apple, of when I should buy it, or if I should buy more shares. I'm sitting at around 50 shares right now. Lockheed Martin was green to start off the day. It has now then turned red, in the red around 1%, so it's not too bad today for Lockheed Martin. I'm sitting at around 43% in total gains right now, so doing pretty good right now. Next is Microsoft. They're down around 2%, not too bad. I mean, down around $250, but I'm also sitting at gains in all these positions. I'm sitting at around at these gains, massive gains that you wouldn't see in a bank account. You would not see a gain in a bank account of not even 12%. You'd be lucky to see around 3% in gains of 3% of a bank paying you. So seeing gains at 62%, 55%, even 20% is crazy in the stock market, and that is why I want to buy more, because the stock market hasn't gone down ever. it's always been going up. And you know, these red days, these red times of fear, times of people selling off all their shares, all their equity, all their stocks, this is the time to buy right now. And so I encourage you to buy more. I encourage you to take a percentage of your paycheck every week, every month, every year, all the time. Just take a percentage of anything you got and put it into the stock market, because you can see these percentage growths over time. So let's go to our performance compared to the Dow, the S&P, and the NASDAQ. So year to date, since January, as you can see, we're the purple. We're performing better than the Dow, the S&P, and the NASDAQ as of right now. As you can see, the around here is where the NASDAQ went very crazy, up around 22.5% right there. But as you can see, they have trickled down, and right now they have trickled down even more, obviously. And right now, year to date, I'm at 12.6% compared to the S&P's 12%, and the NASDAQ's 11.7%, and the Dow's 5%. Let's go to the 3-month. I'm also performing better. My all brokerage accounts are at around 8%, S&P 4.2%, NASDAQ 3.8%, and the Dow 2.7%. So my performance is doing better than the 3 major categories right now for the 3-month. The 6-month, same thing. I'm up around 10.6%, S&P 7.8%, NASDAQ 7.3%, and the Dow 2.8%. Let's go to the 1 year. The 1 year, since a year ago, as you can see, my brokerage account is at around 19.2%. The S&P is around 19.4%, so a slightly better, 0.2% better performance in my portfolio. NASDAQ, same thing, 20.6%, so around 1.4% better performance in my portfolio, and the Dow is at 13%, so I'm doing better than the Dow right there for the 1 year. Let's jump to the 3 year, and the 3 year, let's just look at this right now. The 3 year, so it shows 0% until around right here, around July 6th of last year, because I was in my mother's account under my mother's name, because I was still a minor. So when I turned 18, I still took around a couple months until I transferred out of my mother's account, and since then it has showed the performance from this account. So it hasn't shown the performance from then until I started it way back I started around 2020. So it doesn't show the performance from 2020 until around 2023. But since then, my brokerage account has had gains of around 19.8%, so it's around the same. It's basically the year, but the 3%, the 3 year percentage is for the S&P is 21.6%. NASDAQ is around 14.3%, and the Dow is around 13.7%. So I would say my account is performing very well right now. So let's go to the estimated income for my dividends. Right now, around $980 in dividends per year, and I just want to keep building that dividend snowball. As you can see, for this month, my total estimated income is around $46.78. So all that is just getting reinvested. I've already had around $34 announced, $12 estimated, and next month is supposed to be really good. Usually it's every third month of the year, so March, June, September, and December are when I personally, and most people I would say, get paid from their dividend stocks, because most dividend payers are every third month of the year. So next month should be a pretty good month, about around $112.10. October should be pretty good too, $87.57. And you know what, this around next month, it will not be my income will not be $112, because I have monthly payers every single month, and I'm reinvesting those dividends back into the monthly payers. So the monthly payers will not be paying the same that they will this month compared to last month. So if I do not sell and I get that dividend every single month, I will be getting more than $112 in September, and I will be getting more in October, more than $87. I will be getting more in November from $46, and so on. So let's go to our risk assessment, and this is what E-Trade does to figure out the volatility and risk of your portfolio on a 0 to 20% scale. So my scale it's saying I'm at the more aggressive volatility in my portfolio right now, which I really don't think that my portfolio is that much of a risky portfolio. I feel like I'm diversified with dividend payers, with growth stocks, and the combination of the two. But I'm sort of leaning closer to the more, more dividend growth stocks. For example, like VOO. I want to invest more into VOO because it's more of a safe bet if the ETF holds the top 500 companies in the whole nation. So if, say, Apple's down this day, but Microsoft's up this day, the same day, I'm getting that combination of the two, so I don't own all the stocks. And that's why I like VOO, and that's why I want to invest more in it. I think I started my position in VOO, I want to say a year and a half ago, and I'm already up 20% in that. Whereas if I just kept that near $13,000 in the bank account, I wouldn't be in a total gain of 20%. So let's actually go let's search up the average bank account interest rate. So the national average interest rate on savings accounts is 0.45%. So you compare that 0.45% to any of my gains in my portfolio since I've had them, I've already gained more than the average interest rate from a bank account. And that's why I'm so eager to put more money into my bank account, or into my E-Trade account, to my stocks. Just investing and getting that dividend snowball, getting those gains in my portfolio. I think my dividend percentage right now is around 2.5% right now for my dividends, and I kind of want to get that up to around 3%. So investing into great ETFs like SPHD will get me there. Let's see SPHD's dividend yield their dividend yield is 3.84%. So investing into SPHD every week will probably get me to that 3% range, from around 2.5 where it is right now. I want to see Microsoft's pretty low dividend, but it has very good growth. I love the Microsoft company. I love what they're doing. Google, I think they only pay around point something percent. So not a pretty good dividend over there, but it is a very great company that I would love to invest more in. So I mean, SPHD is a great monthly payer, and VOO is a great monthly payer. I think their dividend yields around 1.35%. So I mean, that's gonna bring my dividend yield down, but it's also a great growth company. You can see the 1 month performance of VOO right now, $510 a month ago. Right now it's around $477. So a near $40 downturn in the past month. So I'm going to start investing more, getting more shares of VOO. $477 a share is not cheap at all. So I'm just gonna keep dollar cost averaging into VOO, as well as more stocks in my portfolio. I have 2 ETFs right now. So dollar cost averaging into these 2 ETFs, S&P 500. These 2 S&P 500 ETFs, SPHD is a high dividend paying ETF that pays monthly. So I mean, to get this up to 100 shares, I mean, that's just gonna be outstanding for my portfolio performance and my dividend yield. Every month it's just gonna keep paying me more and more. I want to invest more into O, see if it goes down in the red, to see if I can lower my price paid down to, I don't know, lower than $57. I mean, that'd be pretty good to invest more in O. I want to invest more in Nike. I'm down around $40 in Nike as well. They have just been getting hammered this past year. I'm down around 34% in Nike. But they're also a dividend payer. I mean, so every time it pays me a dividend, my quantity goes up. I'm getting more shares, but I'm getting more shares at a lower price. So my price paid will go down. Tesla and Nvidia, they are not dividend payers, but they are growth stocks, and I see a lot of growth into Nvidia and Tesla in the years to come. Tesla price, last price is $200. My price paid is $256. So I'm down around 22%, and Tesla right now, that's a big downturn in Tesla. But I mean, what Tesla's doing right now is crazy, and they're really the future of automotives, everything auto. They're doing, Elon Musk is doing SpaceX, he's doing all these things with Tesla and electric powered vehicles. I really see the growth in Tesla. Nvidia, the top of AI right now. I know some people are scared of that. I think some people have been scared of AI. That's why they're down right now. That's why Nvidia is down. But for the past year and 2 years, though, Nvidia has just been on the rise. And you know, I have looked at Nvidia for the past couple years, and I just haven't invested until like around about a week ago. And you know, I want to invest more shares into Nvidia because I really see the growth potential in NVIDIA, as well as Broadcom. Broadcom's doing the same as NVIDIA. I mean, I invested into Broadcom around a year ago, and I'm already up around 65%. So, this is my portfolio review for the day. I hope you enjoyed, and I advise you not to get scared by any means by this market. As you can see, I'm down $1,400. This morning it was at $3,000, so they have then pulled back. But I urge you, right now is the time to get investing. Today is the day to start investing into stocks, and you can see the dividend snowball rise. I'm young right now. I'm 19 years old, so I have a long time. I hope to have a long time in this game, and soon I would love to see these stocks pay, like down the road, pay for all my bills, pay for everything, so I won't have to work all the time, so that's the main goal. Have my passive income pay for my expenses, pay for everything that I want. It's gonna take a lot of work. I have $61,000, $62,000 in stocks right now, so I really want to get that up. My goal is 100K. My goal is 100K in the next 1 to 2 years. That would be phenomenal. So thank you guys for watching and watching my portfolio review for the day. And as always, I must thank God for every day that we have on this earth. Thank you, Jesus, for sacrificing his life for us and dying for our sins, dying on the cross, because that is way more important than anything in this world, way more important than anything in this portfolio. So, as always, God bless, and thank you for watching.